Hi everyone, Willem D. Ritter here with Compass. I want to get you updated on the current state of the San Diego housing market. Well, things have sure changed quickly. With interest rates more than doubling from where they were at the start of the year, home prices have finally started to fall. Let's look at some numbers and provide some context to see what it all means. All right, the big one first, interest rates. Interest rates, like I said, have more than doubled. So for a conventional 30-year loan, the average interest rate right now is about 6.25%. And for FHA and VA loans, we're in the mid to high 5% range, so a little bit better for those. But again, way more expensive than they were at the very start of the year when rates were between 3 and 3.5%. For example, let's say you buy a $1 million house, you put 20% down, your payment at today's rate versus what it would have been at the start of the year is $1,000 more per month. That's quite a significant jump. And of course, as a result, home prices have to come down. So we're starting to see sellers reduce their prices and catch up to today's demand. It's really a difficult pill for sellers to swallow, because 3 months ago they saw their neighbor's house sell with multiple offers. Well, now they're like, I want to test the market. And that's a dangerous game to play, because the home prices have already pulled back quite a bit, and then you get caught chasing the market down. If you do that, you're going to end up selling your house for far less than you would have if you would have priced it accordingly, and your net proceeds is going to be far less, of course, as well. So you really got to be careful pricing your home to meet today's demand versus what it was a few months ago. So right now, the average list to sales price is about 97%. Well, over the last 2 or even 3 years, the average list to sales price has been over 100%. Almost 103% of the original list price was being received by most sellers. So that's a pretty big drop that we're seeing right now. Okay, inventory. So right now we have about 1,300 attached condos and townhomes on the market, and right around 3,000 detached single-family homes on the market. Historically speaking, that's not a lot of volume. We really don't have that much, but it is 30% more than it was this time last year. So we do have a lot more homes on the market with demand slowing. Okay, price. As of the end of September, we are up 13% from this time last year for detached homes and 18% for attached homes. However, that's a bit misleading, because I think we were up maybe 10 or 12% in the first 3 months of the year, but we've given a lot of that back. So by the end of the year, I'll be very curious to see where we may end up. We might be flat after giving up all of those gains that we had earlier in the year when interest rates were really low. Okay, and days on market. Days on market, of course, is increasing as well. Last year's about 21 days was the average time on market before accepting an offer. Now we're at 32 days. Again, historically not that bad, but still that's quite a big increase on days on market before sellers are accepting an offer. It's taking them some time to meet the current buyer demand like I talked about and dropping that price. Okay, the name of the game right now for buyers is patience. You have time to find a home that you truly love. So be patient, find what you love, try to work a good deal, and then also rate buy downs. Rate buy downs are becoming very popular right now. Many sellers are willing to give buyers a credit to lower their interest rate to make their payment far more palatable. And there's multiple ways to do this. There's what we call a 2-1 buy down, which buys it down for 3 years, or a buy down in perpetuity, which buys it down forever. So there's ways to make your payment far more comfortable for you right now, and sellers are willing to contribute to help you get that rate that you're comfortable with in order to move forward. If you're selling in today's market, price is everything. Like I said, I know it's difficult when you saw your neighbor's house sell 3 months ago or 4 months ago for a particular price. That's not the market we're in anymore. So you need to meet the market where it's at currently, and you'll still do okay. There's still buyers in the market. And like I said, with rate buy downs, maybe incentivizing buyers with that a little bit, there's still a good amount of buyers in the market that are willing to pay a decent price. You have to remember, we've come up so fast. Last year, 18 to 20% appreciation. The year before that, 12 to 15% appreciation. Like I've said before, that is not healthy or sustainable, so it was bound to happen. But there's still a lot of demand in the market here, especially in San Diego. So if you price it right, you're gonna do okay. It seems inflation has finally peaked. Now it's gonna take some time to see what that's done to our economy and housing market, But once that all flushes out, I do think interest rates could drop quite a bit by the end of next year potentially, and then we'll see the home appreciation take off again. Will be very interesting to see where we end up. So where we go from here, I think prices have dropped quite a bit from where they were to start the year. Interest rates again are very high, but there are ways to get that interest rate down. I do think we're going to kind of bounce along this territory here for a little while. I don't see the market dropping much more, and I don't see us appreciating much through the rest of the year. Maybe by April or May, we'll see the market settle down. Maybe rates pull back a little bit into that 5% range, maybe even 4.5%. If that happens, I expect the market to take off again. So if you're buying, patience is the key. You have time to find something like. If you're selling, you got a price to meet today's demand. If you have any questions about the market or have any thoughts of buying or selling, please let me know how I can help. Thanks for watching.